Welcome back. Let's get straight to the next management. Welspun Living reported a good quarter, strong revenue growth that was led by the home textile business. We have with us Ms. Dipali Goenka, who is the MD and CEO of Welspun Living. Good morning, Ms. Goenka, and thanks a lot for joining in. Well, congratulations on a good showing in the past quarter. My question to you is, you've grown a fair bit, but you're still guiding for only around 12% growth in the coming fiscal. And as you told us last time, you're not being conservative, you're being cautiously optimistic. Do you want to up that revenue guidance number? And the second part is on the margins. That was a little lower than what you had guided for. You hold on to that 15.5% odd for the remainder of the year?
So I think, first of all, I will still maintain being cautiously optimistic about the numbers because, the numbers look good and we are going to top them up. I can tell you that. But, the problem is the Red Sea as well. I mean, look at this quarter, what we had could have been better. Because of the Red Sea challenges that we had, we had to, refrain from, the kind of the numbers that we could have actually achieved. Now, when you talk about the margins, now let me give you a perspective here. While we talk in the absolute numbers, we are better. I maintain a number of 15 to 15.5, owing to the kind of geopolitical issues that still remain. However, when I talk about a core home textile revenue, it is up 19% with an EBITDA, with a very strong EBITDA of around 17%. When I look at the emerging businesses, which are like my advanced textile, retail, and flooring together, that's where I think we've had a little, kind of a 7%, on that growth. And, that's where we have been a little muted. Or that's where I could say the impact is there on a little bit on our margins. But I think we will overcome that as well in the quarter two. That was also a little owing to the Red Sea in the flooring business as well.
Ms. Goenka, good morning. Thank you for joining in, and which was my next question to you, which was the exports. And since you mentioned the Red Sea issue, how much of it has impacted your exports business? And what's your share of the exports business currently, if you can share that as well? And what's the road ahead that you see for this business?
Our share of the export business today is around 90%, 90 to 92% as we go forward. Our domestic retail, home textile pure is around 5% right now. And a domestic flooring is another, 1%. So I think we are primarily right now export at the moment. But I think Red Sea, we are going to be, August end, we are seeing a little breather coming through. Because of, the challenges that are going to get eased out on the East Coast. West Coast is a little slow, but I think we'll overcome that as well.
So would you hope that Q2 would be slightly better than what you have seen compared to this quarter then, Ms. Goenka, when it comes to the exports business? Also, would you want to break that 90 to 92% number down to say 80-85% and get more on the domestic side?
We are absolutely on that track, I must tell you. And domestic is a very big opportunity for us in this country. And definitely that's on track. Right now, exports takes on that big bucket of ours, and that will continue to grow as well. So I think, yes, domestic is going to be a very clear focus because India is the opportunity that we all are looking at to build our brands here. But yes, exports is where we are right now, growing the way we are, yeah.
Okay, all right. And you've gone ahead and done a buyback as well. It gives you a sense about the confidence you have in the business. But a final question before we let you go. There's been a bit of an uptake in the net debt number. So could you give us a guidance on that front? And I think by FY26, you were aiming to be debt-free. That target's on track?
We are absolutely on track on that. The net debt actually is again owing to the working capital that we basically, had to, because owing to the inventory which we had to hold up because of the Red Sea and the next season. The next quarter is going to be a season for promos and holding on inventory for the kind of opportunity that we have. In our manufacturing is where it was. So it's all owing to the inventory that we are holding right now. So working capital will be on track as we go forward. Net debt is on track. Absolutely confident on the way we are going.
So net debt free by FY26?
Absolutely.
Okay, all right. Appreciate it, you joining in, Ms. Goenka. Wishing you a good day ahead. And we look forward to chatting up with you at the end of the next quarter's numbers.
Let's do that.
Thanks for that. Well, time to slip into a short break. You come back, we continue to focus on markets and on stock-specific action. Don't go anywhere.